You say that there's some troubling signs in the economy, namely when it comes to spending and investment by not just business, we were talking about businesses, but also households.
Yeah, so we've been seeing housing weak now for a year or so, and it's really started to tail down the last couple months. And so on that, we've seen housing lead the last couple recessions. Housing is a much smaller part of the economy than it was prior to the financial crisis, so we don't think it's going to lead to a recession. But we're expecting Q1 to come in something like 1.5% before picking up later in the year.
So how do you gauge the true strength of the U.S. consumer? Do you take a look at how they're spending when it comes to things like retail sales, or do you take a look at the housing market and say, that's really how I view the U.S. consumer at this point?
So we look at kind of how is personal income growing, how is jobs, how are wages. We're seeing wages pick up now. And as these employment numbers have shown, that part of the economy is actually doing pretty well. But there is some weakness that they just don't seem to be willing to buy houses, to do these large purchases. So kind of the confidence numbers look a little stronger than the actual spending of the consumers is.
And of course, mortgage rates have come down tremendously over the past few months. So the weakness was even despite the come down in mortgage rates. John, I want to go to you. Let's say there are cracks in the consumer story. I don't know if you agree with Alan or not, but does that cause you to have some concerns about the U.S. stock market?
Thank you, Melissa. Good morning. Alan makes some good points about housing and also autos, but the consumer is fully employed with wages rising. Confidence came down a bit, obviously, because of the shutdown and the market sell-off. But the consumer's spending on experiences, and I think we need to be mindful of that as well. But the real key for the sustainability of this expansion, as well as whether or not the stock market can keep running, is the resumption of business spending. I think that'll really be the key because businesses obviously spent quite a bit in the first half of last year. Then with the trade uncertainty, they slowed down significantly. And to the degree that we get a degree of clarity on trade, businesses can resume investing. That helps productivity, which prevents income statements from suffering, and obviously a big help to margins thereafter.
Hey, guys, when I look at what economists are saying about the 2019 and they look at the uncertainties out there, a lot of it has to do with the government and the tax cuts. And there's three components to this. Component number one is what will be the level of refunds? Did people under withhold or over withhold in 2019? The second, the corporate tax cut has had an impact on investment in the last year, but we don't know about the effect this year. That's two. The third element is government spending. There was a lot of stuff appropriated in 2018. This is not related to the tax cuts, but more government finance. But some economists I'm reading see a lot of government spending still left over coming into the calendar year 2019. Where do you stand on that?
So we think that extra stimulus from both the tax cuts and the extra spending from February and March last year, that will carry over for the first few quarters and boost the economy a little bit. But it has a lot less effect than it would have if that extra spending had come when we were in a recession. Usually when the economy is doing well, that government spending often leads to a bit of a pullback from the private sector because those resources can't be deployed into the private sector. But as you get further out near the end of 2019 and into 2020, that's coming off in growth.
John, going back to your point about the uncertainty holding back up, for instance, businesses spending and investing, as we saw in the first half of last year, it sounds like you're thinking ahead to a back-end loaded year in terms of gains for the U.S. stock market, but we've seen a monster January. So how does this year play out?
Well, if you could give me a flat by March 1st, I'll take it for the month of February. I think we can hold the gains, but as you all know, February is a difficult month. But to the point about clarity on trade, business is spending again, and Steve made the point about the consumer. AMT relief didn't factor in last year, so we look at consumer and small businesses getting about $200 billion this year. Look at government spending about $150 billion, and then immediate expensing relief along the lines of $75 or $80 billion. That's more than $400 billion, which is a 2% tailwind. And so to your point, Melissa, I do think it could be more back half related for the equity market, in spite of the great January.
John, send me those numbers. I need to see those. I haven't seen those yet.
Okay, very good.
Those are big numbers. Huge numbers.
Yep, they'll be in our report. I'll get them out to you shortly.
Did you see this J.P. Morgan report over the weekend, Ben White highlighted?
Oh, I'm not sure if it's the same one.
On real estate.
Oh, and the effect of the tax cuts.
The effect
yeah,
of the
I started
tax
reading that
cuts
this
on
morning.
real estate.
There's been a bunch of studies.
And what it's done to actually depress real estate prices
in the salt areas.
Especially in salt areas, and what that could ultimately mean to the economy.
That's not a shocker, right? Like any
no,
of the
I think we
states
expected
where
that, but what I'm surprised by is that it has not had a larger. What they didn't make the direct correlation to being then a
probably
drag
$750,000
on the economy.
You hear anecdotal stuff from these areas. For example, parts of Connecticut, you hear impact of housing prices. There are parts of New Jersey where it's true.
New Jersey, Manhattan. But you're
There's
also
a Fed study as well on this.
anybody like breaking out the violins for this either, though, because you are talking about high-end housing on all of these points, and it's going to be met with the Crimea River.
I think what the report was doing was actually was saying actually that in salt states, we're not just high end, all the way down the line. That you're actually seeing prices go down marginally in some cases, but in a lot at the high end, but even at the lower end.
You raise taxes by $1.5 trillion to partially offset the corporate tax cut.
Right.
That is not a meaningless gesture. There's going to be an economic fallout.
But while you see those higher end prices coming down a bit, that is the part of the market that's actually seeing more sales, according to the NAR.
Right.
So it's not just the salt pushing things down at that upper end.